So, welcome. We're in the last panel, the last round of discussions. I found the discussions today very interesting because Marcel Haag from the Commission mentioned that, it's not enough to develop a capital market initiative at the DG FISMA level. It's not enough to have ministries of finance looking at it. It's not enough for the European Commission to push it if the governments don't act also. And I think some of the other panelists were speaking about getting people involved, making sure they realize money invested in Europe is going to help their economy. It's about a European market. And Nikolaj said it very well. We need to build a European market. We need to work together, to pull together. It needs to be about savings and investments. We need to connect the economy with the financial market. And I think, of course, this panel is going to be very interesting because, how do we do that? How do we link? Some of the panelists will speak a little bit more forward-thinking. Others may look a little bit at what is wrong. And so I think you'll hopefully get a good feeling. What I would like to do, because it's typically, when we're the last panel, we run out of time and there's no room for questions. From time to time, within our discussion, I'll look around and see, is there anybody who would like to ask a question? So think about it and think how you might pose questions to this panel. So with us today, we have Lasse Boehm, who's Head of Unit for Economic Policies in the European Parliament Research Service. We have Natasha Cazenave, who's Executive Director for the European Securities and Markets Authority, ESMA. We have Eric de Montgolfier, who's CEO of Invest Europe. Jos Heuvelman, who's a member of the Executive Board of the Dutch Authority of Securities, Autoriteit Financiële Markten. And Nikolaj, Kosakewitsch, who's President of Nasdaq Copenhagen. So really a panel that is going to look at the market itself. Those of you who are in, and I think this room is in European bubble discussions, you've all read, I'm sure, the letter report. We were all waiting for it. It is the latest in a long series of reports, blueprints, high priority statements. But this report is different because it's the first time, 5 years ago, I didn't see a report on this single market. I didn't see a report by the Eurogroup. So this, to me, is a signal that we're finally thinking about linking that economy to the financial market, and that is absolutely crucial. So I'm going to turn, first of all, a little bit on that famous Capital Markets Union, although we should maybe, going forward, say European Savings and Investments Union. The AFM, the Dutch authority, has collaborated with the Nederlandse Bank on a paper analyzing what EU policies are needed. And that was interesting too, because it was at the national level, thinking, what do we need to do, we in the Netherlands, but also at the EU? What measures are essential to link together the economy and capital markets? But I'm going to turn, first of all, to Natasha, because at ESMA, of course, she has been working towards supervisory convergence, and that is a tough world. So let's hear a little bit from Natasha and then go to Jos, please. Thank you.
Thank you very much, and I'm really happy to be with you today on this very important topic. And as you were saying, Josina, it's great to hear the interest that is being expressed for these very important topics. So I'm very happy that Jos is here, who can speak to the AFM and the DNB paper, but maybe a few words from ESMA's perspective on what we see. So for the moment, Capital Markets Union or Savings and Investment Union. First to say a lot of progress has been achieved, and I think I would like to commend still some of the work that the Commission has done. We tend to always complain of what has not been done, but over the years they have really worked extensively to try and get key milestones across the line. And so just wanted to flag a few: the Listing Act, ESAP, the consolidated tapes. They're not all implemented yet, but they are positive steps in the right direction. Is it enough? No. We still have fragmented markets. They still are not unleashing their full potential. So, okay, the question is, what more can we do? How can we make more? And I really wanted to echo what you were just saying in your introduction, that it's really welcome to hear this renewed momentum and political support. There was a lot of complaints in previous discussions around this theme that that's exactly what was missing, that connection to political support. And so in a changing world that raises new challenges, the sense of urgency that we feel coming through these different statements and reports is I wouldn't say reassuring, but it is important for the support to go forward. So we all know we need these private funds to finance the EU priorities. I like the way Enrico Letta says it's not an objective in itself to have a capital markets union, but it is to be able to serve our ultimate EU priorities, the needs, the transition to sustainable, more sustainable economies, digital transformation. You know, the figures that were given by the Commission are, we need 620 billion euros per year until 2030 for the sustainable transition, 125 billion for the digital transformation. These are massive amounts that the governments themselves, of course, cannot sustain. And so this is really needed for the growth of our economies. But also it's needed because we need to empower European citizens to be able to invest and put their monies to work for their own retirement needs. It was mentioned also in the previous panel, we have what Fausto called the pension bomb coming, so we also need to be mindful of that need for the future. ESMA is working on its own recommendations that will come later, so I will not be able to give you any details today. We're very happy to be able to contribute to this discussion, put some proposals on the table, so that is for another discussion later. What I can say is we're really trying to take that holistic view and try not to limit ourselves to financial regulation, because a lot has been done in financial regulation, and actually if we want to make a real change, we need to look beyond. So I'll just briefly touch upon 3 areas. We need to look at what the investor actually needs. We need to look at what the companies need, and we need to maybe have another look at the regulatory framework. So maybe very briefly, so I give some time to my fellow panelists also to come in. So how do we empower EU citizens to benefit from the markets? We believe we need to look a bit better at what are the opportunities for them to be able to save for their long-term goals? What are the opportunities we need to look at so they can actually participate in wealth creation? We need to consider, as I was saying earlier, beyond financial regulation, tax incentives, what mentioned earlier, but also pension system. How do we unlock that long-term capital to feed into our markets so we have that ability? And what I think is really one of the most important messages from this political momentum we see is that to be successful, we will need a combination of member states and EU-level initiatives. And the conditions seem to be there for that to happen. You need member states' decisions because there's no tax change without a member state willingness. But you also need that EU impetus to get that progress. Of course, you also need financial education, that risk culture that was coming across. So perhaps, as Guillaume was saying, maybe let's look again at the product, at the advice, at the incentives, so that we have the right combination for investors. For firms, funding opportunities, we have fragmentation today. We don't have enough liquidity. We have valuation issues, which means some of our European firms, they just go to the US to get their funding. So how can we solve that? We have excellent experts, so let's see what they tell us. But certainly, maybe we want to have another look at the trading, at the post-trading environment, at interoperability to simplify and create more efficiencies. And finally, of course, as a regulator and supervisor, we will be looking at what can we do from our perspective in our space to try and improve the framework so that in this rapidly changing world, we are equipped to be more responsive, to be more agile, to have the right tools collectively. This is not just the regulators, but so that we are able to actually respond to the needs. So maybe we need to streamline, maybe we need to simplify, maybe we need to have different tools just to be a bit more agile. So happy to open also that discussion in due course.
Thank you, Natasha. And I'm very conscious, you know, that we have 5 panelists and an hour and a quarter to discuss major issues. So forgive us if sometimes we shorten, because, you know, we would love to do more. Jos, your famous paper, AFM and the Nederlandse Bank, what initiatives do you see at the EU level, but maybe also at the Dutch level, that could be done to really build that capital market?
Yes, thank you, Chair. First, quite a few things have been said already by my neighbor, Natasha, but let me try to add a few. First, I think that the focus of the EU policymakers should be on flourishing business and the quality of life of the people in Europe, short-term and long-term. Capital Market Union is only an instrument. It's not a goal in itself. I think we should keep that in mind when we take measures. Now, Mr. Kampa said that there was no crisis. I do not totally agree, actually. I think the pension bump or the pension gap is a crisis. Maybe it is a slow-burning crisis, but it will also take a long time to solve it. And if you are on a long journey, you better start early. I think that's what we are facing here. And so I think pensions is crucial for the quality of life of the people in Europe, but it is also the biggest game changer, potentially, for Capital Markets Union. And pensions, due to their long-term horizon, are very much risk-bearing funds. And for a capital market union, you need capital to start with. Well, pension capital would be very, very suitable for this capital market union. In my country, we started with that 60 years ago. And I think it takes brave politicians to take such decisions as we had in those days. Whether we would do it now, I don't know actually, but then we did. There are several ways to organize a pension system. Of course, the Pillar 1, but I think we all agree Pillar 1 will not do the trick. We need more. We need a funded private pension that can be organized basically in two ways. You can organize it in such a way that everyone is on his own. He has to make his own decisions. Then you run into all the issues of cost and trust, complexity that we talked about in the first panel of today. You can also organize it in a collective way, which is what we did 60 years ago. We started with a compulsory system. There was no choice for people. They had to enter that system. But by doing that, you solve all the issues of cost and trust, of complexity, because it has been taken care of by professionals and not by everyone on his own has to make all these kinds of difficult decisions. So one of the key issues is for Europe to build this a funded private pension system. You can do it both ways. If you do it in an individual way, you have a lot of issues. But yes, you also have freedom of choice. You can do it in a collective way, but it is a bit paternalistic. So not everyone will accept that, but for us, it has worked very well. So pensions, for me, are the biggest game changer if we really want to get a capital market union or a savings and investment union. A second issue that's also important has to do with regulation and supervision. I do agree that we should not only look at the negative side. A lot has been achieved already. We are very close to a single rule book. We have made quite a few steps on supervisory convergence, but that will bring you only so far. And if you really want to make the next step, you have to think about centralization of supervision. Now you have to do that in a smart way. We have seen the SSM. I think the SSM was set up to deal with an acute crisis, the banking crisis. It handled that in a very effective way. But was it efficient? I don't know. I think there are some question marks, so we should not simply copy the SSM. We should do some real thinking, make sure that we do not add an extra layer of supervision, but think, okay, what areas are easy to organize centrally? For instance, data collection and data processing, that can easily be done centrally. There are certain sectors where there is a lot of cross-border going on, trading venues, CCPs, CSDs. They may be candidates for centralized supervision. Maybe large asset managers as well, but that would be the next step. I would not, when it comes to retail investment, I would not go for a centralized supervision. Markets are too different. That would be my two main points at this stage.
Thank you very much, Jos. And I'm going to come back to you later a little bit more deeply on supervision. I'm going to turn to Eric and Nikolaj to talk a little bit about that pension bomb, about the Nordic example, where you have savings accounts that are are encouraging those discussions about investment, about taking individual interest, about stimulating people to think about their pockets and to think they, and I call this, when I discuss with politicians, I often say to them, you need to build something in people's minds that they, like companies, have a balance sheet with passive and active sides. So if you don't hesitate to take a mortgage loan for 30 years, why can you not think about investing for 30 years? Right? And I think this is something, this consciousness we need to build. So, Eric, I'm going to start with you. The pension bomb and turning people's minds to investing. What is your take on that?
Well, before actually asking people to change their minds, maybe we should change how pension funds function in terms of their investment mandate and the different restrictions that they have to invest in a certain number of asset classes. I've had a discussion with the EPRS chair a while ago. We were now actually disagreement in principle, but as usual, the devil lies in the details. Short term, I think that what is really important is that existing European pension funds get a freer rein to invest in European private equity and venture capital funds. Why? Because our fund managers have actually invested 553 billion euros in the last 5 years in European businesses. So we are an essential part of how how businesses are actually financed across Europe. That's an important first topic. Second topic, it happens that we have actually an outperformance in our industry versus public markets, which is extremely significant. When we look at the performance that we generated since inception of those funds, we are between 400 basis points to 950 basis points per annum better performance than typically a benchmark like the MSCI 500. So it's absolutely critical that pension funds can access to the best performing asset classes to benefit their pensioners, simply said. And it happens that in some countries, you are actually prohibited as a pension fund manager to invest in private equity and venture capital. So let's start by the easiest thing we can do. Let's make sure that member states, who are, as you're all aware, responsible for pensions, organize things in a way which allows the fund manager to decide whether it makes sense or not to invest. We're not asking for a certain amount of assets dedicated by obligation to the asset class, but let at least pension fund managers have the ability to decide on the allocation that they can have. I'll pass here to make sure that we have a debate.
Thank you very much, Eric. Nikolaj.
I'm going to be on the exact opposite side of that spectrum, which makes it interesting to listen to for the audience. I work as the CEO of the Copenhagen Stock Exchange, but I'm also responsible for Nasdaq's European equity franchise and also equity derivatives. So obviously financial literacy is something that is very close to my heart. And if we look at the pension system in the Nordic region, I'm gonna double click on Sweden for just 1 second. It actually, the whole mandate of the Pillar 1 system in Sweden is actually on the opposite side of the spectrum of what was just presented. In the pension system under Pillar 1 in Sweden, there's an over-allocation to investments into equity when people are relatively young, up until the age of 55. And the end result is that 10% of all Swedish pension assets are listed in local listed companies. That has built an extremely vibrant listing environment in Sweden. It has ensured that all of the SME companies out there that needs growth capital have had access to capital. It means that pensioners, savers who are now investors have automatically diversified their portfolio. But because they have automatically diversified their portfolio from when they entered the job market, they are also subjected to a high level of financial literacy, because there is an interest to actively say, do I want to choose the default setting, which is, in this particular example, very high allocation to stocks versus fixed income products or alternatives. It brings them into this discussion, and they are inherently well informed and very financially literate, if you will. So fast forward to the Pillar 3 system. The Swedish government, like 20 years ago, they decided to say, all right, we understand that in order to stay competitive on a global scale, we need entrepreneurial society. An entrepreneurial society has an inherent need for capital. We, the government, we, the employer associations, we, members of the industry, we need to support that journey. The banking industry, the advisor industries, we all need to be behind that entire journey. And during that process, they also set up probably the most effective investment savings account structure we have in Europe. I don't want to bring US into the roster, because actually the 401k is that's a pretty effective scheme. But the investment savings account in Sweden is super effective because it's low maintenance, it's super easy to understand. Taxation is the same taxation as freeholding assets, but it's not inventory. Well, it's sort of inventory based. You pay a low annual debit interest on your account balance. So it's super transparent what you're going to pay each year. And in a year where the stock market is up by 20%, you pay a very small proportional interest to the government. But if the stock market is down 10%, then obviously the fixed annual interest or debit interest rate is quite high. But it's easy to maintain, and it's easy to understand, and you don't have to speculate in your tax payments. But it brings me back to the point of saying, if you want the pension system to support not only the capital market union, but entrepreneurship and job creation and welfare creation, the pension system is a brilliant place to start. And whether that needs to happen from an EU policy perspective or on a local policy perspective, I don't want to use the word force, it's a little bit too harsh, but incentivize the pension systems to support entrepreneurship and SMEs. I think that's a brilliant place to start. And if you hear pension asset owners saying, we do that through venture, we do that through private equity, there is some truth to that story, but that venture capital does not necessarily end up in the local country. Does it end up in Europe? Maybe it does, maybe it doesn't. There are also asset owners that are investing in venture funds, and we know what happens with venture capital once they go public. Very often, they move the company, they move the listing to the US, because that's where the original venture capital is arising from.
So I'm going to give, Erik, I'm going to give you an opportunity to respond to this.
Please, because I disagree fundamentally to that description. What you call the story.
Hang on
not
a minute.
Story, it's reality.
Let me just say one thing, and which I think really is interesting. You talked about the entrepreneurial culture that we need to build that, and that also comes out in the Letta report. And you talked about brave. I think it was Jos that spoke about brave governments. And I like that word, brave governments, because I think the time has really come to be brave. I think now, and I'll turn to Erik, because, of course, this is, the difference between, the venture capital and private equity market and then the public market. But I think one doesn't exclude the other, and you can build in a stepping system. I think what is important is that you start with where Nikolaj says that the Swedish example is, and I'm sure Guillaume and Alexandra are happy, when we talk about transparency, ease of doing something, building that entrepreneurial culture, all that is building that consciousness. So let me turn it positively, Erik. So the stepping stones, right? You have these stepping stones going from the public to the private markets. But we also want to encourage to have companies staying in Europe, because we do want to grow that European economy. We want to build that single market. So how can we achieve all of that?
Well, first things first, I think there's no actually competition between public markets and private markets, as you somewhat alluded to. I think it's purely complementary. One thing to answer your question is to look basically at the facts. I've seen, and you've seen with me, the various slides showing how public markets have evolved over time, and the lack, actually, of momentum in Europe versus the US. I will just mention one single thing that we've seen in the last 20 years. Private markets have evolved from a cottage industry into a very mature market, which means that essentially players have started to segment the market with a view to be able to accompany entrepreneurs and managers on their growth journey from segment to segment, from venture capital to growth, to more mature development, internationalization, globalization, etc. And it happens that on private markets now, you have players who can actually support the growth journey of a company for a very long time before the managers and entrepreneurs, who are the decision makers, decide to go public, which ultimately they can do, or they can sell, or they can keep and staying private. So this decision does not lie with public markets or with private market operators such as our industry. It lies with the entrepreneurs who are finding value in being accompanied by specialized and professional investors who help them build their business sustainably, grow it over time. Capital markets, public markets can do that too, but what they don't bring is the type of value, type of expertise, type of accompanying support that we bring, including money. But it's not only for money. It's because we are partners. And that's something that capital markets on the public segment can't really provide, which means that you need a certain scale that was, I think, mentioned earlier to go public at one point in time. And there are other considerations, but I won't go into that. So no competition, cooperation over time.
Enrico Letta mentions scaling up. Companies need to be bigger. We need to have champions. We used to talk in the past always about European champions. Okay, so we do need to scale up those companies. We see that. Otherwise, you know, we're letting ourselves open up to foreign third country companies. But at the same time, we have that challenge in Europe because probably one of the panelists will know the figure better, but it seems to me about 80% of the companies in Europe or more are SMEs. And of course, what you say with an SME in Germany is very different to an SME in Italy or Spain, for example. So we have a big interpretation of SMEs. I'm going to go to Jos because we're hearing sort of, you know, the private and the public markets. We're hearing the challenges for the companies. We need to enhance cross-border investments. We need to establish far more standardization of settlement rules. We need to address liquidity issues. What are you seeing, Jos, at the Dutch level, at the AFM, how that could be brought about? What are the changes you might see?
I think if I start from the perspective of the retail investor that might or might not invest abroad, I think for him or her, what is crucial is cost and trust. And cost means he should have, in my view, a simple, low-cost products that will be sufficient for the large majority of the retail investors. There may be a few who want to do special things, but the large majority should be treated, I think, with low-cost, simple products. And also the issue of trust. And what you don't know, you don't trust. I don't see a Dutch retail investor investing in a Portuguese SME because it's just too far away from him. If you want to, let's say, connect those two, you need to organize it through funds, through collective things. There will not be a direct market, I think, not in the next 10 years for people from one country to invest in individual SME stocks in countries that are more than 2 borders away from them. I don't believe that. So for me, cost and trust are the 2 most important things for retail investors. Another thing that comes closer to my own business, supervision. What is important is that we have a passport system in Europe, so you can enter in one country, get a license, and then do business in all other countries. It means that we have to be sure that in all the 27 countries we are equally strict, or at least strict. Yeah? Strict or stricter, but at least strict. And if that is not the case at the moment, I cannot do much against that. If a firm that sells bad products to my people, the Dutch people, and comes from abroad, I can almost do nothing against that firm. So either we are much more centralized when it comes to giving the license, yeah, so we make sure everyone is equally strict, or you give back some powers to the host supervisor, so he or she can take care of what's going on in his own market. That's another crucial element that also helps to build trust.
I like what you said just now, is either we go one step further or we go back one step. And I think that's an important thing to keep in mind, because, you know, and CFA Institute is a global organization. I have a lot of American colleagues. My American colleagues always forget we're not a federal state in Europe, you know, and that this is really a pragmatic issue. You know, we need to build between the local levels and upwardly, but yet we do need to build a European market. Nikolaj, responding to Jos, now I'll give one other thought for you. I agree with Jos, you know, that it's difficult for someone in Holland to start buying in a Portuguese SME. However, when crowdfunding became fashionable, people didn't hesitate to go and invest in God knows where, in God knows what, even a taxi driver in Lisbon because something was happening, right? So somewhere along the line, I think maybe there is a median way, but what do you think?
I think crowdfunding was a little bit of a meme concept at the time. So I think that a lot of people, they just invested in whatever their neighbor said and whatever some social media influencer would tell them to invest in. I completely agree, by the way, with Jos, that do not expect that any mechanism we can put in place in the world today would incentivize Portuguese people to invest in Finnish derivatives or Finnish stocks. The consolidated tape will definitely not solve that. Is it cheaper to get access to that data? Yes. But will access to data drive that trend? No, I don't think so. It's about getting access to a news feed, which is easily available on your handheld device. It's about taking an interest in a company or in a company's product. And getting access to information about that particular company very easily in the palm of your hand. Will that be possible with ESAP and probably also some AI overlay to ESAP? Yes, absolutely. It will make the financial journalist more equipped to cover not only the local editorial stuff, but also what's going on in other regions of Europe. That being said, I'm still super doubtful that we will see a trend where investors from more than 2 borders away will invest in SMEs. But are there other things that you can do to increase the interest and remove some of the barriers? Yes, well, language is kind of the first barrier that we need to look at. I think the entire post-trade structure is something that we need to look at, because right now it can be way too burdensome and way too expensive for SMEs to try to attract capital from more than 2 borders away. And then I think there's a legitimate opportunity to applying AI to finding investment opportunities for retail investors. And I think that neo-brokers in the future will make tremendous steps towards that. So if we're thinking about neo-brokers in Europe versus neo-brokers in the US, there's It's just two different worlds. If we look at public.com or Webull or E-Trade or Swap or any of the big neo-brokers, they deliver more than an hour and a half worth of digital educational content to their customer base on a daily basis. So even the neo-brokers in Europe that are doing really well, they still have a long way to go. And if that means that a retail investor based in Portugal gets in from their feed, from their neo-broker, something that's interesting about a new piece of technology in Sweden or a new piece of technology in Ireland, as an example, that would be great. But it's going to take some time before we get there on breaking down the barriers and informing the investors.
Riek, what is your, and a short intervention, because I need to go to the next block of topics.
On this topic, I have no relevant contribution to add. I'd rather discuss at one point in time the fact that we have no more public money available to actually finance the twin transitions, and I think that private markets is part of the solution, and I think that we could do things to actually turbocharge this specific financing mode.
I like the use of the word turbocharge. I think all of us are aware that for this next policy period, we do need to turbocharge. So I'm going to go to Lasse, because he is going to give us some future thinking, out-of-the-box thinking, which I'm very interested to hear at this point in time. Because, Lasse, you sit, of course, in the European Parliament's think tank, so you are seeing sort of, where the interest of MEPs is, how they are looking at things. And of course, that's sometimes different to what is coming out of the Council, and of course, from the proposals from the Commission, etc. The milestones is important because it's saying, okay, what are we doing? Let's put some meat and let's box it in and let's see how we can compare it. And I think it is important. We need to set ourselves goals. And when we were preparing for this panel, Lasse was reminding me of, 20 odd years ago, how we used to put milestones. Letta referred back to Jacques Delors, and I think he was a great one for putting milestones and, how we can achieve it, these stepping stones that we need to do. Lasse, how can we be more ambitious at the policymaker level?
Yeah, thanks. I don't think I will bring anything new to the table, because I think that's the whole point about Capital Markets Union, that we all know what needs to be done. We just need to do it. And the difficulty is, of course, how are we going about this? Because in many ways, the way I look at or conceptualize Capital Markets Union is, I think it's become a ritual rather than a policy. We have these annual sort of industry get-togethers where everyone says that, yes, it needs to be done, but how do we overcome the blockages? Because the whole difficulty associated with the CMU is that the benefits are huge and spread out wide, whereas the losers are very concentrated and have a lot of political power to block progress. So apart from listening to this panel, which I found fascinating, thanks for having me, I couldn't help but also look at the room. And I'm sorry for the online viewers, you may not be able to see it, but there's a big red line up there. And I can't help thinking, is the CMU one day going to become this big red line, or is it going to be a small sort of painted line? I think that's the question we need to ask ourselves for the next 5 years. And if you ask for any solutions, now, I don't think there's a silver bullet, and I think several speakers said this, but in terms of methodology, I would subdivide the problem into two different boxes. The first one would be short to medium term, and the second one sort of more long term. And the short to medium term, to me, would really be about supervision, because supervision is a market impact of its own, in a class of its own, whereas, yeah, we need insolvency law, and we need harmonization ideally, and we need progress, harmonization possibly on taxation. But apart from it being very, very difficult, it's also very diffuse politically speaking. So I think the advantage of supervision is that it's something that you can sort of grasp. And looking back at the previous now outgoing mandate of the European Parliament, one of the things that we did manage, not in the field of capital markets union, but in a related field, anti-money laundering, is we made huge progress on supervision in a related field. And I think what we now look at in terms of supervision is almost kind of a menu of different types of supervisions and different supervisory procedures. Not all of them perhaps as some people would like it. I think this was what Jos and some other speakers were saying, and I, for once, fully agree with that, and that's also the position of the European Parliament, to see more EU-level supervision, in particular, of course, in relation to ESMA. But I do think that, firstly, there has been political progress on supervision, and that already says a lot. So it is possible to move things. You know, politics is bricks of Lego that you need to move around, and we managed to move those bricks of Lego in the field of anti-money laundering. The question is, can we use some of these recipes also for CMU in the sense of giving ESMA more supervisory powers? And I would really start with that. It's not a guarantee for success, but I think it's at least a methodology. It's at least a plan, or at least a plan that I would put forward to the panel.
Thank you. And as you were speaking, you were reminding me that one of the things we do see at the EU level is that we can go along quite calmly, like a sort of slow-moving river for a decade or so, and then suddenly there's a crisis. And suddenly you see Europe pulled together now, you know, to the point on the energy crisis, to the point on geopolitical issues on our borders. You know, when you also see neutral member states suddenly getting involved in defense, that's, you know, out of this world almost. So what you're saying is you know, let's be that red, brave lion, and I love that image, I'll make a picture of it. But let's be that brave red lion on supervision. And I'm going to go, of course, to Jos and Natasha on this point, because can we be brave? How can we do it? I do remember Carmina Di Noia, who used to be a commissioner at Consop and is now, of course, at the OECD, saying when there was the review of the ESAs, well, you know, let's just be realistic. Let's realize we have to do it in 2 stages, because I was saying to him, come on, why don't we push this, etc. So let's be realistic. Europe was always built in stages. Okay, so Europe is built in stages. Which stage are we at, Jos?
I cannot tell you at what stage we are. I think that, yes, a lot can be done on supervision. Actually, a lot has been done already on supervision, but as you know, Natasha, we are working very hard on further convergence, and I think the next step would be for certain parts to centralize, and then if you are brave, you do quite a few of these parts, and if you are less brave, you do only one or 2. My biggest point here would be, it's not the only thing. And make sure that this is not the only thing that you do, and so we don't let the politicians get away with only giving a message to us. More needs to be done than just on supervision, and then I come back to my previous point. I think the biggest game changer for CMU would be to have a private funded pension system, and that goes way beyond financial regulation. It goes way beyond the EU level. It needs to be tackled on the national level. It's more a social policy thing maybe than a financial policy thing. So yes, we can do more on supervision. For my part, coming from Netherlands, we are in favor of that. Actually, we were very disappointed then when we discussed about cryptos. We thought that would be an ideal topic to tackle centrally, because no one had already invested in it. There was no legacy, no knowledge, no contact, no systems. But we were very disappointed that we were only joined by one other country who was in favor of doing that in a centralized way. So now we have 27 countries together with ESMA working on this. We have crypto firms who apply for a license in maybe 5 or 6 countries, and just wait and see who comes up with the best offer. I think that's not what we should have done, but we did it clearly wrong, a missed opportunity. And I'm sure there will be new chances, so let's take them. And also look back and all the chances that we have missed, maybe we can still correct a few. Thank you.
So, of course, and thank you, Jos, for reminding us that, of course, that pension issue is crucial to unblocking and to stimulating that capital market, but how difficult it is because it's touching on national rights, national consumer rights, the legality of pensions, its social model, social model, that's really difficult to touch. And yet, the social model is the S in the ESG, and we forget about it all the time. So having had my big bugbear here now, Natasha, you from the perspective of ESMA, so you went to, we had a first reform after the ESAs were established. It was already, I think, quite something to establish ESAs in 2011. That was really quite something. And to achieve two areas of supervision was really interesting, and then you've done a great job. And of course, questions are always asked, how can ESMA grow? How can EBA grow? How can IOPA grow? Can they get bigger? What is their mandate? What are the challenges? Do the boards need to change? What are the issues if you were to achieve more supervision at your level?
Thanks. So let me start by echoing what Jos was saying, because as much as I hear the point on supervision, I also think that will not change the fact that European citizens keep their savings on bank deposits. So we still need to do something, and it can be tailored to member states' realities that can be different, but on taxes and long-term capital. But again, great to hear the support. Let me maybe take a bit of a broader view, because I don't think we are actually the best place to comment on those different discussions, and we'll wait and see where the political balance ends. But maybe to a bit provide more concrete information on what we actually do and how we operate. So first to say, strengthening European supervision generally is one of our key strategic priorities. And what we mean by that is we mean to build a European supervisory culture across member states. And we do that very much with the help of Jos, who is the chair of our senior supervisor forum, so very much driving our convergence work. But we're trying to build a risk-based, data-driven, outcome-focused supervision. So building that culture so that across the member states, the experience in terms of supervision, where we have advanced very much in terms of the single rule book, the actual experience on the ground of how supervision is run is the same. Okay, this is an endeavor, we're working on it in different areas and we have different tools, but just to explain how we look at it. And in that context, we look at the reality. The reality is that most entities in the EU today are supervised, and it's well done so, at national level by national competent authorities. In some cases, we have joint responsibilities between ESMA and national authorities, and in a very limited number of areas, the co-legislators, in all their wisdom, having considered carefully the pros and cons, have decided to entrust ESMA with direct responsibilities in terms of supervision. And I think it's fair to say, as you were saying, Josina, that ESMA has developed a credible stance in terms of its supervision. So just to give one example, our credit rating agency mandate, we are the sole supervisor in the EU. We have global colleges where we sit next to our colleagues from the US SEC, the UK FCA. We engage with the firms, and this is a long-standing mandate we had from the start, and we are credible there. Over time, we've had a number of other areas. The most recent one that has been agreed by the co-legislators looking forward is to entrust us with the supervision of ESG rating providers. So it is still happening that when it is considered that there is added value for EU supervision versus national, new area, similar to existing mandates, it is still happening. So just to share how the thinking goes. And then for all the other mandates where very much we are complementary or we are there more as a facilitator to make sure we reach that goal of the common culture, we act as a coordinator, facilitator of convergence. How that works in practice, we have a very wide array of tools, and there we try to adapt to what the reality is and how we need to foster that convergence. In some cases, we just need to provide some clarifications, so we can put in Jos's committee, we put all the senior supervisors from the 27 national authorities in a room, and we discuss a specific topic, and they can agree this is the right way forward. In other cases, we see that we really need to get our heads around what's going on the market, so we have what we call common supervisory actions. We decide of a topic, and all supervisors go together on that topic. We collect information from the market, and we decide together what are the right steps forward. And then also we have, of course, the peer reviews that everybody is familiar with. But just to share that there are different ways, different models, it's very diverse. And I think you made that point very well, Lasse, that actually over time, there are all kinds of different decisions that have been made, and many various models can function, actually, in reality. We just need to be clear collectively in the EU, what is our goal? What are we trying to achieve, and in which areas? And then we can make it work. And the final point is on data, where I couldn't agree more with what Jos was saying. And it's very important to understand that this is one of those areas that is the most demanding. We've had, over time, accumulated many regulations requiring a lot of reporting. And so it is a challenge to avoid the inefficiency of having everybody reporting through different channels with different requirements. So it's very costly for the European system generally. So if we can provide that service, we have put out a data strategy where we want to provide that value, that we can be a hub where we invest on behalf of, we collect the data, and then we give it back to national authorities, of course, but also to the market or to academics, so that that can be also one way of providing that EU added value, hopefully for the greater good of the whole ecosystem.
Thank you, Natasha, and thank you for reminding us about, the supervisory committee where Jos is. And I want to ask you a question, Jos. Have you seen the trust between supervisory and between NCAs increase? Has there been a sort of build-up of communication? I'm sure there are memorandums of understandings as well, but how you also see, for example, that there is, for example, closer collaboration between the AFM and the AMF in France. So there are clusters of closer collaborations. How does that work in this universe?
Yes, you're right. It can work in many different ways. For instance, sometimes we discuss a case, a certain case, and then everyone can learn from each other, inspire each other. Maybe sometimes after the meeting you think, okay, I should give him a call because he said something interesting. That's how you start the ball rolling, that people call each other instead of waiting for ESMA to say something. So it's not only ESMA-NCA, but also NCA-NCA connections that start to improve. But what you also see, and I can only talk from my own experience here, is that if we have, let's say, on a certain firm that does cross-border business, for us it's much easier now to make a call to this NCA and come to a common approach, or not, but then we have to talk again. But at least it's much easier to get in touch with each other because you know that person. You have seen him in meetings. Let's say 5 years ago, only the policy people would have met, but not the people who do the frontline supervision, the people who engage with the firms. And now we have gone quite a big step further.
That's really useful to know. I'm going to turn to the audience. So we've discussed the sort of market structure. We've discussed getting retail investors in, companies involved in this new union. We've discussed building that convergence. Do you have any questions about this? Yes, please. Say your name, and then ask the question, and who you want to ask it to.
Alessandra Casale from Assonime, Italian Association of Listed Companies. Carmine Di Noia, who you mentioned before, used to work for us, and we still believe that we need to proceed by step by step. And on supervision, we think that we could start giving ESMA some power, supervisory power, on listed companies when listed companies choose ESMA instead of the local, the national authority. This could be one example, or we can give ESMA powers on cross-border situation, for example. The idea is not to get rid of the national competent authorities because they are very useful, but just to change the allocation of the powers. And we think that with a gradual approach of ESMA in the direct supervision, ESMA will have the time also to learn from the national competent authorities and gain some experience on the direct supervision. So we think that there are several ways to proceed going versus the centralization for cross-border situation, etc. And yeah, we think that we need to explore it. Thank you.
Thank you very much for that question. Natasha, do you want to respond to this?
No, again, we will wait and see where the political balance is on this one. I don't think it's for us to comment. But we have heard this idea of the opt-in. There's also this 28th regime in Enrico Letta's report, so we'll have to see. Anecdotally, I think the views are quite split across the market. And again, what I was saying is today the situation is issuers are very much at national level. It's a very core competence for national authorities, the prospectuses, reviewing the disclosures. We would have to see where the balance should land.
Jos, what is your opinion?
I think what you say makes perfect sense, and depending on how quickly you want to move, you make smaller steps or bigger steps, or you make small steps in a very short period of time. But the idea is to take a more gradual approach. I can live with that because I think the crisis is not in supervision. The crisis is somewhere else, as I pointed out a few times already. And there we should not wait, and we should really make a move there. But on supervision, I can live with big steps, but I can also live with smaller steps. But we have to make sure that we try to be efficient as well. And my experience there so far with let's say the EU level is that it's not always about efficiency. So I think there we can improve, and we need to keep each other sharp, I think, in that respect. And I also think if we want to give more powers to ESMA, we should also look at the funding model. Because if you can only do that if you have sufficient funds and that are paid by the people who undergo the supervision. So those two go hand in hand. If we give more powers, we need to take a second look at the funding of ESMA.
Eric, you want to come in?
Yeah, absolutely. I think that opt-in is probably a good idea for the reasons that have been already mentioned, provided, again, that ESMA has the resources, human resources, to get that done. Because, as always, if it's just adding another layer, it's not, I think, relevant from a market's perspective. And it's true that dealing on our end with the 27 different local authorities is complicated. When it comes to marketing our funds, we have also some, let's say, barriers of entry in some markets at a cost which is sometimes fairly different from country to country. So if we have the ability through a mechanism where ESMA can be actually a provider of supervision, if I may, to the market, it can be a good way also to see the market change in terms of dynamics and local authorities, national authorities adapt their way of operating in a way which will be less cumbersome for market participants.
Thank you. Any other questions? Yes, there's a question at the back. Yes, please.
Hi, thank you. Catherine Carlson from Politico. I mean, I'm interested in the political fora where these different discussions are taking place. We've got the Lasse report, we've got the Draghi report, we've got a summit going on today and tomorrow. It seems that there are a lot of existential issues around supervision, and those conversations are taking place without much input from the supervisors themselves. So my question for the panel, whoever is interested, is should the ESAs or ESMA in particular have more input into this discussion about its own future?
Who would like to take this?
So Catherine knows. So these are political discussions, and ESMA is a technical body. So, as I said, I think for us at this point in time, it's important that the political discussions take place. We are there to provide any information on how we operate, what we do, what our needs are, what it would mean, to contribute to the debate as much as necessary. but we're not necessarily calling for anything more at this stage. And we're happy again to contribute to whatever discussion is needed.
Lasse, you wanted to come in.
On a related point, I'm obviously not going to comment on ESMA or any other supervisory agency, and I said what I said about supervision, which, by the way, shouldn't belittle the other fields in which, yes, we do need to make progress. But I wanted to say, when it comes to political discussion and who should be plugged into the political discussion, I think one of the key challenges is we need to make sure that the beneficiaries of Capital Markets Union are plugged into that discussion, and that is not yet happening. That reverts back to I guess also the first panel. We need to make sure that the people who are dealing with and who are supposed to be financing the clean tech or energy transition, that they get, if not a say, then at least a sense of urgency and the sense that the Capital Markets Union vitally matters for their policy objectives. I think that's the work that also needs to be done in terms of enlarging the political discussion.
Thank you very much. So we have one last topic that I want to discuss, and I know I have a little bit more time. Thank you, Jella. But I think it's important to turn the circle back to the first panel and to come back to the retail investor and talk about financial literacy. So I always, and Roberto, who's working with me, knows this, I have a triangle in my head: product governance, business conduct, and financial literacy, investor education. There needs to be a balance between them. Sometimes we say, oh, you know, the investors need to be educated, and then everything is going to happen, right? Sometimes we say, oh, no, we need to ban products, that's the way to do it, we use the stick. Sometimes we say, oh, no, we leave it up to the financial industry. Okay, so it's a bit of all of them, I think. But I want to hear and probably start with Nikolaj, because that microcosm in the Nordics is, you know, from time to time we get all these conferences in Brussels about the Nordic example. Let's start. Financial literacy, how did that change? You explained a little bit already, but maybe go a little bit deeper into that.
So yes, it did change quite early in Sweden, almost 20 years ago, and the neighboring countries, both Norway and Sweden and Finland, both Denmark, Finland, and Norway have tried to kind of copycat some of the initiatives that the Swedish community have been running with. The most recent example is that Nasdaq has partnered with an organization called the Young Shareholders Association, where we have so far to date educated 1/3 of all high school students in Sweden on financial literacy topics. Understanding your private economy, understanding the basics of investment. Obviously, there's no inducement, there's no recommendation anywhere to be found, but we believe that that is important. We're also partnering with some of the local banks, but honestly, I have to admit, whenever we take those types of initiatives cross-border into some of the other countries, it's a little bit slow. It's a little bit difficult getting the banking associations, the local banking associations, to join forces, because basically what we hear and what they openly admit, all of them, is saying we need the likes of exchange groups or other interested stakeholders to help save us invest the first dollar. That's the most difficult part, getting them to take the first initiative to invest their first dollar, or krona, or euro, whatever it might be. And that's where they can need the support in terms of inspiration. But then when we say, all right, let's see if we can help you. We'd like to educate some of your customers on this particular asset class. No. You have to educate them on how to buy our products. And that is a little bit of a conflict. I understand it, because I think it was Anne-Marie previously who said that 60% of all assets were tracking the incumbent products of the banks, but those were the inherently poorest performing products. That's something I can definitely agree to. But unfortunately, that is where banks are, again, obviously promoting their investors to invest. So I think we have to not only PRIP, KIT, all those mechanisms, they're great, but we are sitting on a gold mine of modern technology to educate the younger generation. And I think that it's not only going to be exchanges, it should also be the banking industry. And basically, it should come with a strong, both carrot and stick from government in saying, all right, who is it that actually hold all the financial assets? And the people who hold all the financial assets for retail investors, they should be responsible for educating people on how to manage their money. And they should be responsible for saying, do not expect big government to bail you out when you turn 67. You have to take an active role yourself. And let's start from scratch.
I like this, what you said about it, that enormous step of investing that first dollar or euro. I think it's crucial. It's that mindset. Jos, the Netherlands, the AFM is very strong on looking to its user group. You use behavioral science also because you look at, for example, selling teams and the way they're structured and the way they have a bias. And I found that quite interesting in combination, of course, with financial education. What is happening in the Netherlands on this issue?
Yes, you're right. We are quite active in that field, and we believe that financial education is fine, but will not do the whole trick. We think that humans are weak. They have their biases. When we talk about pensions, that's something far away. It's when you are old and when you are maybe sick or close to dying. So most people don't like to think about that. And they have a bias for the present. So we think we should help people basically to protect against themselves, their inertia and their bias. And so we think it would be good to set up an organized system of financial health checks by some trusted party where people with certain intervals or maybe at certain life moments are getting a financial health check to see how are you doing, mortgage, study costs for the children, pension, savings, the whole lot, insurance. Basically, are you financially healthy or not? And if not, okay, maybe you want to think about this and this. And I think so then you make people aware and maybe you can activate them as well. But it starts with organizing this for people because we believe most of us, myself including, by the way, I looked for the first time at my pension statement when I was 50, so way too late to do anything. But fortunately, others had done it for me. So we think that we need to help the people here a little bit. We are also, like was mentioned before, we have in the Netherlands a wiser in money affairs initiative where the ministry is participating, we are participating, the banks are, insurance are, and we do a lot of financial lessons in schools. I do it every year for many years already, and many of my colleagues in the financial sector do it as well. So that's another way to take your responsibility. And not so long ago, we also have set up a national coalition of financial health, and that really looks at the financial health component, staying out of debt instead of solving debt issues. It's better to stay out of it. And so we are working on that as well. There we have also the private sector, the ministries, the supervisors, and also we have many employers now who offer this kind of financial health check already to their employees. For them, it's not only a cost, because if your employees are financially healthy, they work better, they work longer hours, they have fewer sick hours. So it's good to have happy employees. If you have to spend, I don't know, 200 euros every 5 years for a check, that's money wisely spent.
I think that's actually really good. comment, thinking about the financial health check and how companies need to provide that for their employees, like we have a medical health check for your physical well-being. I think this really is at the heart of the social model of the EU, right? And I think that's, this is what makes the EU a great place, because we do think of the economy, we do think of moving on and entrepreneurship, but we have the underpinning of the social rights. And I think that's really... Natasha, any words on financial literacy and sort of how I know, you've done mystery shopping, you've encouraged that. Any initiatives? I know, of course, it's much more at a national level, but how do you see ESMA wading into this?
I'll be very brief. At first, I really like the idea of the financial health check, because indeed financial education also otherwise is a very, very long-term. We should never neglect it, but a very long-term difficult project that is very much done at national level. I was going to quote the Belgian initiative here because they are very strong, but the AFM also, and the Dutch experience is very inspiring. So maybe just to add, investor protection is really core to our mission, to what we do, but I wanted to maybe take two angles to try and be on a more positive note. One, to say digitalization could really be an opportunity. We see a huge risk with the young generations that tend to circumvent any of our financial regulations. They don't go through any of the MiFID questionnaires or anything, and they go straight to their crypto apps. And off they go, and it's quite a significant concern. So we could really collectively use it as an opportunity that these tools are so easy and agile. So we've been advocating for pushing vital information, what we call layering, which is not a very nice word, but to say giving gradual information about what the investor needs so they can actually understand and access a meaningful information so they can make the right investment decision. So that's one way. Of course, we should never forget the non-digital literate, so we should not let them on the side, but still, this could be a very big opportunity to improve and move away from these endless disclosures, as was discussed in the previous panel. The other topic I wanted to think about is we have this huge transition, right, to sustainability. We also, again, here in the young generation have enormous appetite to make a difference, to change, to invest, to contribute to the sustainability transition. So here, a key focus for us is to make sure that we get it right in that context. So focusing, and Jean-Paul Servet touched upon that, how do we prevent greenwashing? So we make sure that the products that are given out there are aligned between the claim and the reality of the product. We are getting there. There's more and more sort of how do you say that, self-discipline within the market. We're seeing that, but we see that also as a financial education challenge. We need to make sure that we capture that willingness to contribute in a meaningful way so that we can provide clarity. So there's a big, probably also effort on here, the policy-making side and the regulators, because with the ambition and the speed at which we have developed this framework, we are facing some kind of heaviness and complexity that we're going to have to take another look at. So I think the Commission is very well aware of that. And the last point I wanted to make is if we want to make sure we get it right in this particular space, given how financial literacy and education takes a while, we really very strongly would like to advocate for consumer testing so that we can make sure and we test whatever we put out there as a new regulation or proposal in terms of disclosure, that we give a chance that we can actually appreciate what the investor actually understands when we put that out there. And I can close on that.
Thank you very much, Natasha. And I want to add my little piece there, because of course, CFA Institute, we represent professionals. And part of the thing we discuss at CFA also is ethics. That's part in the business conduct. And one of the interesting discussions we had at offsite last Friday was when we talk about financial education, if you put the finance professionals, many new entrants into the finance profession haven't done Masters of Finance, where you get taught ethics, but maybe come in from engineering, maybe come in from data, maybe come in from totally different, and we have to open to that because we need diversity of skills in the financial market. So building again that issue of ethics, that everybody understands what it is. When you work in the finance industry, it is not that it spins on itself, but it is there also to underpin the economy. That is going to be a challenge as we go into the new world. I know we probably have overgone time. I apologize, but I thought it was really a great panel. Thank you so much to all of you. It was a lovely discussion. Let's give them a round of applause.